What do you think would solve China and the U.S.? I mean, is it just like China growth needs to come down to the U.S., the trade gap goes to zero? Like, what's going to be enough to end it?
I don't think it's an on-off end kind of thing. I think it's going to take a long time to try to reestablish some sense of trust, which may come very slowly. We may have to learn to proceed independent of trust. My late father, who did a lot of work in international relations, liked to say there's not just two options, trust and distrust. There's learning how to proceed independent of trust. And I think we're going to have a lot of work on that in our relations with China, where we try not to distrust them. Maybe we don't trust them, but we're going to have to learn how to get along independent of trust. And it's very hard, and there are years of reestablishing the frayed relations we've had with them.
Do you think, and this is speculation obviously, do you think that that happens if we get a President Biden, or do you think that this is the way we're headed no matter what?
I don't think we're headed to better relations no matter what. The Democratic Party has not been friendly to China in its most recent incarnation. I think there'll be tensions no matter what happens. The Democratic Party has been supporting some aspects of President Trump's get tough on China policy over the last 3 years. But I think Joe Biden's his attitude is not one of being bellicose. So I think he might be the right dose, who's both pragmatic enough to try to get some things done without going too far and kowtowing to the Chinese.
So as we wrap up our conversation here, Peter, you've been so nice to spend so much time with me. Let's thread all three segments together, because if you look at what's happening with China and the U.S., that's going to lead to what? Lower productivity, lower innovation, weaker global trade. At the same time, investors are trying to figure out how to take on risk and where to go for safety, and the 10 years at 51 basis points. How low do we go on the 10-year, wrapping in all this?
I don't have a pinpoint forecast. It's worrisome. My worry about the economy is of course, COVID is terrible and the unemployment is terrible, but I'm more worried about the economy 3 to 5 years out, with productivity grinding lower, with the debt overhang, encouraging companies to take out yet more debt. 20% of U.S. companies with debt service greater than profits is just terrible. And so it's the grinding lower of productivity is something we really ought to worry a lot about. And I'm bleak on that, I have to admit. And I think that eventually weighs on assets unless we can pump up the economy and the Fed can get that seamless handoff I talked about from higher and higher real rates all at the same time.
Yeah, it sounds like a perfect storm that we would have to make happen. At the same time, is there a credit crisis coming in the corporate bond market, particularly after COVID? There's been lots of reports about PPP, companies accessing PPP then going bankrupt anyway. So it's sort of like a let's keep the zombie companies going. And I wonder how that fits into that 3 to 5 year time horizon for you.
Yeah, that's the zombie companies are dragging productivity lower. It's a terrible consequence of the Fed's approach to monetary policy. And I hope we don't have to have a cataclysmic credit crisis, but just a winding lower of credit values and progressive bankruptcies means we write down how wealthy we think we are when all those assets turn out to be worth less than we thought. But the Fed's fixing prices in the credit market is part of what's making equities more volatile. And I think that's something we all have to keep an eye on.